I'm Alan Kenny, Editorial Director with REIT.com, and I'm at REITWeek 2013, NAREIT's Investor Forum in Chicago. Joining me is Philip Charls, CEO of EPRA. Philip, I need you to do me a favor. What is the Alternative Investment Funds Manager Directive, and why is it important to REITs?
Alan, it's the aim of we shorten it to AIFM Directive, was to regulate for the first time private equity and hedge funds. And it's obvious that if you give those two names, that REITs should be nowhere near in that group. However, at the moment we are into the phase where local governments need to implement the directive in the local legislation, and it's clear now that the leading players, like the countries like UK and France, they seem to understand the situation, and I don't think there's much of a risk there that they will include REITs within the scope of the directive. However, in Germany, the BaFin, which is the German regulator, took the position that being a REIT, having that tax status, would automatically bring you under the scope of the directive. We had a lot of people have been lobbying them. We met them personally 10 days ago, and we walked away with the impression that they now understand that the fact of having a certain tax status does not make you a fund. And that was our impression, like I said, walking away, and that they are now more into the mode that they will judge companies on a case-by-case basis.
Philip, you'd think with all the disruptions in the financial markets in Europe in the last couple of years, it might give REITs an opportunity to come in and grow, maybe provide some stability in the market. Have you seen REITs taking advantage of those opportunities?
I think, Alan, Europe has gone through an important year in 2012. I think we turned the corner. The attitude that the ECB has taken has been received very positively by the financial markets. The REITs, the listed sector, is in a very strong financial position, which enables them to benefit at the most favorable conditions when they tap the financial markets, the capital markets. And what we've seen, and that is really a game changer in 2012, is that because of all this, listed companies in Europe are now traded either at par or at the premium to NAV, and that's really, really new. Mainly where you see this, and this is also very interesting, is in companies that have strong position in the big cities. So investors look for London, Paris, Berlin, Zurich, the Nordics, think Helsinki and Stockholm. So that's another very interesting development. And going forward, I think if we see the financial crisis fading away further and further, we do think that there will be opportunities in secondary markets as well. And again, we think the listed sector, being strong as they are at the moment, will be in an excellent position to benefit from it.
Philip, do you expect to see any major movement on some of the bigger policy questions in Europe in the next 6 months or so?
There will be, if it will be in 6 months, I don't know, but there are, I think, two areas that are interesting to look at on the regulatory front. One has to deal with the financing of pensions. I mean, Europe is still way behind, say, the United States, Australia, Canada, with regards to the financing of pension programs. We are still, a lot of countries have defined benefits rather than defined contributions, so we see that movement now. And what we are doing is really pushing, like you've done so successfully in the US, that listed will be a default option within the defined contribution network. And we're really, really grateful how we can work with NAREIT, because like I said, you're way ahead of us. And by exchanging high-level staff like we've done in last year with Meredith Despins, and we're doing now with some of our senior analysts who spend time in the US, I think it's a fantastic way for us to learn and to move the whole sector forward. So that's one area. The second area is that the EU, as well as the OECD, wants to push investors more into long-term investments rather than short-term. There we try. They're working on a green paper at the moment to do this, also to promote investment in infrastructure, and we're trying to make the REIT model part of that green paper. It's very important and for the future, and I think we are very well placed because of our sustainability track record and a transparency track record. And this is one of the areas that we keep, telling the general public about and politicians. We just brought out a paper highlighting our contribution to society. It's called Building a Stronger Europe, and it's a highly recommended reading material. You can find it on www.epra.com.
Always a pleasure, Philip.
Thank you for having me.
And for more on this and other REIT news and analysis, be sure to check out REIT.com.